What's up, guys? It's your boy BG Walls. Thanks to everyone who subscribed on my channel. This is a new channel. I'll be posting more content about the institutional order flow. In this video, we are just going to do the basic market structure on how to identify the uptrend institutional order flow and the downtrend institutional order flow. So, as we all know, guys, that the market in an uptrend moves in higher highs and higher lows. This is our higher high, higher low, higher high. This is the and in a downtrend the market moves in lower lows, lower highs, lower lows, lower highs, lower low. So this is the basic schematic of uptrend and a downtrend. Higher low. This is a higher low because of this high, it is lower than this high, and this is our lower low, lower low. Sorry, this is our lower, this is our lower low, lower low, and this is our lower high. This is the basic schematic of a uptrend. This is the basic schematic of a downtrend. So in an uptrend, the market always clears the liquidity that is resting above our high to create a new high. And in a downtrend, the market always breaks the low that the liquidity is resting in to create a new low. So in institutional trading, smart money concept, this is not always the reality, because of the market doesn't always bounce back on our resistance or our support. So this is the basic schematic on how the market always do. The market always create the high, then it goes here, that, and it comes back to take the orders, and it continues with a trend. So this is what happens. The market breaks the structure. This is the break of the market structure to take out this liquidity that is resting here. This is the break of market structure to take out the liquidity, then the market reverses. After creating the new high, the market comes back to take what the orders in here, then it respects our point of interest. This is our point of interest. This is our point of interest. The market takes respect this point of interest. It is either our order blocker, rally base rally, rally base rally, or drop base rally, to take out to respect this level, which is our point of interest, and continue to create another new high to clear this high above. And in a downtrend, what the market does, in a downtrend, what happens is that the market create the new, break the structure and respect here, and it rallies. I mean, and then it respect our point of interest here, back point of interest. Remember, this is our break of market structure. This is our break of market structure. Break of market structure. This happens in a downtrend, but then this is not always the case. Sometimes in an uptrend, let's start with an uptrend. Sometimes in an uptrend, like in an uptrend, mostly we focus on the market breaks our highs to clear up the liquidity. So this is not always the case. Sometimes the market rallies, drops until to this low, to clear the liquidity that is resting in this low, to create a swing failure pattern, then to take this liquidity that is resting here. We can't say this is a break of structure because of this is just a manipulation. They're just taking out this liquidity here and continue with the trend, which is an uptrend institutional order flow. So same applies in a downtrend. Sometimes the market doesn't respect our point of interest in here. What it does is that it takes the liquidity that is resting in this high, then it continues to drop in a downtrend institutional order flow. So if you can notice, this is a manipulation of, if you can check, this is the manipulation of support and resistance. If you can notice, this is the manipulation of support and resistance. Okay, here it is, break of structure. We broke the structure to create a new high, break of structure to create a new high. Okay, then we reverse to take the order block, which is our point of interest, then we rally to the direction. So as retailers, we are being taught that if the market breaks the structure, if the market breaks the resistance or either the support, it will then become an SR flip. Then the market will respect that. So we are being taught that if this is our support, if this is our support, this is our resistance, then the market comes back here, then it breaks. What we're being taught is that when the market come back here in this previous resistance, then it becomes our support, then the market continues. So if you can notice, this is the manipulation. This is the manipulation of this, because of, as support and resistance trader, where will you put your stop loss? Your stop loss will be resting here. So if the stop loss is resting here, then the market push downside, meaning that the market will take out your stop loss. So if you can notice, this is the manipulation of support and resistance, since the bank needs liquidity for their orders to trigger. So let's check this in a real market structure to check if this schematics really applies on the market. Let me check. This is how we as you can notice, this is a downtrend. This is a downtrend. What happens in a downtrend? We break the lows to take out the liquidity. But then an overall trend is a downtrend. So here's our low. Here's our low. Here's our low. This is the break of structure. This is the break of structure. The market broke the structure here, and then it came back to our point of interest. Came back to our point of interest, which is here. Our point of interest, which is our order block that is sitting right here. Then again, the market broke this low, this low here. The market broke this low here, this low here. This is the break of structure again. This is our break of structure. After this market broke this structure, we created a new low. Then the market came back to respect our what? Our point of interest. Our point of interest. Another thing, the market broke the structure here to create another new low. Where is our point of interest? Here is our point of interest. This is a point of interest. So in an uptrend, in a downtrend, what I can say is that the market breaks the low. The market breaks the low. The market always breaks the low. Let's check here another downtrend. Here is a low that we just broken. Here is a low. This is the low, which is our break of structure. This is the low, break of structure. Then after the break of structure, we came to this point of interest. If you can check, this is a point of interest here. Then we created what? We broke this new low here. This is what? This is our break of structure. We created this. We broke this market structure here to create another new low. So if the market continues to in a downtrend, we'll have to break these lows again to continue to the downside. So where will be our point of interest? Here will be our point of interest. So the market will just do like this. If we continue to the downside, the market will rally and then drop to take out this lows in here. This is what happens in a downtrend. It always happens in a downtrend. If you can check in here again, this is the break of structure here. We just broke this low in here to create. We just broke this low here. Just broke this low here to create this new low. And then where is our point of interest? Here is our point of interest that we just respected in here. This is our point of interest. Our order blockers, this is our point of interest. This is our point of interest today. This is our point of interest. But in an overall trend is what? Is a down. An overall trend is a downtrend. An overall trend is a downtrend. Even if we can check our risk, an overall trend is a downtrend. An overall trend is a downtrend. We just highlight our what? Our point of interest. Then we target our what? Our low that will be broken. An overall trend is a downtrend. So let's check if we can get this. The same thing applies in a downtrend. Thanks guys, don't forget to subscribe on this channel. I'll be focusing on market structure and institutional order flow for more content. Thank you guys.